So today I'm going to talk about another stock that I sold this week. I know, 2 stocks in 1 week. So I sold this for a 70% return, which I'm very happy about. Obviously, we're here to make money in the stock market, and when you do, celebrate it, and that's what we're going to do today. And as I always do when I sell a stock in the stock market, if I sell it for profit, I'm going to say why I've sold it and the reasons behind what I'm kind of thinking. And if I sell it for a loss, you guys know I always come on here and I don't hide about any stocks that don't work out. I talk about my winners and losers, not like many other YouTube channels out there that just talk about the winners and then hide the losers. I'll talk about what kind of went wrong with this investment, and it's nice to make videos about the winners for sure. And apologies, this video is up on Saturday. It was actually supposed to be Friday's video, but I ended up going to the hospital because I thought I broke a couple of my toes playing football the night before. Turns out they're not broken. Turns out I'm just going a little bit soft. So yeah, that's where the video was supposed to be. But let's get stuck onto this video today. Now, obviously, it's really good to have such a good couple of weeks in the stock market, and especially this week. This week has been absolutely amazing. Some of the stocks have been rallying up. Selling 2 stocks for good amounts of profit has been really nice as well. I was going to launch this this weekend, but I've launched it a couple of days early. The Patreon Black Friday sale. So this is not directly going to be done through Patreon, it's going to be done through PayPal. The reason why is that I can offer a bigger discount. Last year I offered a 16% discount. This year I'm offering a 35% discount, so you'll be able to get access to the Discord for £39. Now this is normally £60. And then you have Patreon fees on top. Because it's done through PayPal, it doesn't have the fees as well, which is really good. And what that'll do is it won't give you access to the Patreon because it's not being done through the Patreon. It'll give you access to the Discord, which is exactly the same, because on there, you'll still be able to get all the exclusive videos, over 100 exclusive videos, my live buy and sell alerts, and you'll be able to talk to me and many other investors through there. It's been very popular already. I'm trying to get back to the emails as quick as I can to get you guys on there. If you do want to join, send me an email, jkrinvesting@gmail.com, and I will get back to you on how to join the Discord so you get all that exclusive content and also know what I'm buying and selling, and also a place where there's a lot of good investors in there every day just talking about stocks, which is really useful of bits of information you might miss as well. So yeah, I think it's not bad value, even if I do say so myself, for £39 anyway. And yeah, we don't normally do that many sales on here, so might be a good one to take advantage of anyway. But let's get onto this stock that we sold for a 70% profit and the reasons behind it. So obviously really good to take profit on the table. The stock that I sold was Revolution Beauty. So most of you guys will know I bought this stock last year. It was a bit of a bit more of a higher risk play. There was bit of a turnaround going on where they've had a few issues with the accounts. The share price has gone down massively, and I looked at during the summer of 2022 at this stock, and I went, I know the company quite well. I know the products are very good. My girlfriend raves about them all the time, and normally when I go to I'm looking for presents to buy for her, I'm like, is there anything you really want? And she'll go, oh, maybe this makeup Revolution. So I knew the product was good and it's a legit business. It just looked like they've completely messed their accounts up through a few things that they reported. And I thought, realistically, what's going to happen is the owners are probably going to get thrown out here. They're probably going to get some form of slap on the wrist. And then realistically, there's a good brand, a good product under here, and most of the sales are going to be legit. Obviously, it was accounting issues that were trying to get themselves around to benefit them. And yeah, I thought, you know what, when I look at the valuation and I look at the risk to reward, there's risk here. Obviously when you've got a company that has some sort of account issues, there's the element of risk there. But when I looked at going, well, if they make it through this account issue, this company is definitely undervalued at these sort of levels. And yeah, obviously the account issues have been resolved, and obviously now the stock is back at reporting good financials and the company's moving back up in the right direction. And that's the reason why I originally bought it. But how did I get to the position where I sold it? So first of all, one point that I probably put in there is that I wanted to create room in the portfolio. Now, obviously, then Hotel Chocolate got bought out later in the week, so that's definitely a lot of room created in the portfolio. It creates cash, so I've got a lot of cash now in the portfolio that if I ever see something drop in the next couple of weeks, I've got the cash to go buy a very good chunk in a lot of positions at the moment. So I've got a nice cash balance, which I tell you, I've not had a nice cash balance for like 2 years because we've been in that awful stock market. So that's really nice. I've got a nice cash balance and create room in the portfolio. I felt like there was so many opportunities out there in the last 2 years. I've been buying quite a few stocks and the portfolio's got a bit fuller where I've kind of got a lot of stocks in the portfolio, and I don't want to have too many stocks. The point of being an individual stock picker is not to have that many stocks. You're trying to pick the best stocks to own, and also from a research point of view, to keep up with the research of all these individual stocks, it can be a bit of a nightmare. Now, I don't mind it. I put a lot of hours into the stock market every week. I would say I put a good 30-40. So when it's the busy weeks, I would even argue up to 50 hours into the stock market. So I don't mind the research, but even from my point of view, I was going, it's getting a little bit heavy now. So that kind of played an element, cash creation, and also the element of reducing the portfolio a little bit at the moment, because it has expanded a little bit with the amount of stocks that are in there. The next thing is growth. So I always said, and I think I said it on the preview of this week, the only way I keep this company is if it shocks me with crazy amounts of growth and it gets to like a war paint, which is a kind of make-up rival. If it gets to them sort of levels of growth, then I'll reconsider, like, okay, this is actually way ahead of what even I was expecting when I bought into the business. I thought this company would grow around about 10% a year when I bought into the business, and that's the valuation I kind of was working out on what the potential future value of the company could potentially be. If we start thinking the company's growing like 30-40% a year, I'm like, whoa, I'm going to have to completely revalue this, because I bought this and the valuation I was starting to bake in will be a lot higher if they're growing at them sort of rates. So obviously we saw Q1 came out with 60% growth. This quarter I was like, what's it going to be? And the growth came in at 20%. And that was bang on what I was kind of looking at. And I was like, oh, that's interesting. Now, looking at what they're suggesting, it seems like the guidance got hiked up a little bit, but considering we've just gone from 60 to 20 and the guidance is, I still believe, around 10%-ish, I was like, they're probably going to see a little bit more of a slowdown going forward, and it goes back to roughly what I thought they were going to grow at. So I thought, if that's the case for me, my valuation that I was working out on it is about right. And I still think, like, if you are a shareholder of the company, I still think like the company will do well in the next 5 years. I've not sold it out because I think the company's in mega amounts of trouble. Just for me, I looked at it and I thought I can kind of justify selling out of this one now. I originally bought it because I thought it was way undervalued, and 70% in a year, it is good. So obviously that was something that kind of was factored in there. The next thing was profit. So I think on a pre-tax basis, they were profitable, but on a tax basis, they weren't profitable. So they're still not actually really profitable. And that's the sort of issue that I have, is that I look at the profitability that a lot of companies are churning out, that are makeup brands, Elf, Warpaint, and I thought the profitability would be a little bit higher, especially when you look at the gross margins improvement. I thought they'd be dragging that profitability up a little bit more. So with that kind of risk there, I always thought if there's some sort of incident or a bit of a downturn, I thought, you always want to see them ramping up that profitability as well. So something that I kind of put in there as well. Balance sheet. The balance sheet has got worse since I invested into it in 2022. So as well as that, the combination of not being that major profitable as well, tied in together. So the balance sheet was getting a little bit worse since I invested in the company. Obviously, the balance sheet is still not too bad. It's still a decent-ish balance sheet. But obviously, when you're increasing the debt, high interest rate environment, cash coming down a little bit. They actually said the recent cash balance has gone up a little bit in the actual Q2 update. But it just, in this kind of environment with a not profitable company, that was, not a major issue, but something else that I kind of factored in there. The next thing, probably the biggest thing for me, is the new management and the drama. I think with the drama that we've seen over the last few years, I thought it was probably a good thing to maybe move away from it. The other thing is new management. I don't know what management are going to be like. I don't know what decisions they're going to make. There's kind of a big unknown there. The other thing that kind of puts me off is like the ties with Boohoo. Obviously, you guys know I'm not happy with the management team at Boohoo, and I'm thinking, well, if they're getting into another one of my investments, I don't know how much I trust them to run this correctly, compared to how it's been run quite well in the last, how it's been run from a product point of view in the last few years. So there was a lot of unknowns from that point of view as well. Big change there. The next thing I considered was a big insider dump. So if you look at the ownership, the original founders still own a big chunk of the insider part of the company, and I'm thinking, well, from their point of view now, if they're not having that much day-to-day running of the company, the company's now listed, the stock's moving in the right direction, financials are moving in the right direction, at what point do they kind of go, oh, you know what, let's just sell 5% of our holding? I think combined they've got a lot of holding. I'm probably showing you right now the holding they have. Eventually, if they're releasing the capital onto the market for many, many kind of years, maybe that holds back the share price a little bit from a longer term point of view. So once again, that was a little chunk that kind of added in. The next thing was results leak. So before I invested in the company in 2022 when the account issue was happening, the share price was going down a lot, and it was kind of like, why is it going down? Like, why is this stock going down so much? It was on my watch list because I was going, the numbers look okay, and the stock keeps going lower and lower and lower. And then eventually it came out, obviously the account issue happened, and then it was like, oh, so was the stock dumping massive amounts previously? Because I mean, maybe 2022 we did have the kind of bear market going on at the time, and maybe that was a bit of an impact coming into the company. But you're looking at it going, there's got to be something more than that, because it's dropping a lot more than what other companies were at the time. And you look at that going, you know, why? And then eventually the account issue kind of came out, and it wasn't a big drop because it had already dropped so much. I mean, it was a fair drop on the day, like, but realistically, it looked like it had priced them in, and you're kind of thinking, well, did the market know that this was an issue, and that's why they've been selling off? And that was a bit of a strange thing. Now, the other thing that was the other thing on top was when the results came out for Revolution Beauty. So if you saw on the day, the stock was, I think, negative on the day. I think the stock actually went negative on the day the results came out. So no movement on the share price. And when you look at the results were decent. Like, they hiked up the revenue guidance. I think they hiked up the profit guidance. Obviously, the numbers were really good. And you're thinking, well, this is a really good Q2 trading update, but the shares are down. And why were the shares down? Well, if you look at Revolution Beauty, the week before they reported their Q2 numbers, the stock was up over 30%. And you're like, well, maybe some people are pricing in that the results are going to be good results. But you're thinking, well, if the stock is up that much on the day, and then it's actually down on the day of the results, clearly there's some disconnect going on there. And then combine that with what happened a year ago, I was like, I don't know if some of these results are getting leaked a little bit. And the fact that it's happened twice, it's happened previously, and then it's happened a year later, kind of makes me think like there's something going on here where there's some leak going on to the market. And I don't want to be in a position where, obviously there's a couple of things that go on in the market all the time which shouldn't happen, and they do happen, and it might be a bit of a surprise to some of you guys, but there's some dodgy things that sometimes goes on in the stock market, and you've got to accept some of it. But for me, if I'm in a position where there's this amount of investors knowing information before I know it, that puts me in a massive disadvantage. Because if suddenly the results are awful, and then the share price is already low, and then I'm like, well, I'm going to sell my shares now because I'm not happy with the results. I'm going to be like, well, I'm going to have to take a big loss because everyone else knew before me. So that's not me saying it's true, but that's just my feeling around there. And that was a good chunk what made me a bit nervous. The last thing was, like I said, the valuation point of view. I was looking at this going, it's probably going to be about 9 times EBITDA, which isn't too bad. But realistically, when I look at one of the rivals and probably the best makeup brand that we have on the UK market, which is Warpaint, they've crushed it. Like, the balance sheet's decent, the profitability they're putting up is really good, the growth's double what Revolution you just put in, and they're trading around about 15 times EBITDA for this year. So when you compare them here, I mean, let's say that Revolution Beauty goes to 10 or 11 times EBITDA, it might go up to there, but how much more is it going to go? Like, I can't see it doubling, because obviously that puts you around 18 times EBITDA. I can't see Revolution Beauty being 18 times EBITDA when you can go pick up Warpaint, that's a better company, paying a dividend. I think they're also buying back shares. That's 15 times EBITDA. So I was looking at one of the rivals and going, there's no way I can see Revolution Beauty doubling right now when you've got Warpaint at 15 times. It just doesn't make sense. So from a valuation point of view, I was looking to some of the competitors and I was going, it might have a bit more upside. It might go up another 10, 20, 30%, but I can't see it doubling. And that was where I was kind of like, do I find an opportunity now where I could see a stock that could probably double from here and go buy that one instead? Because wouldn't that make more sense as well? So that was kind of the combination of factors that all came together, and I went, you know what? I invested into this for a turnaround. I've got my money. Let's take the profit off the table. Let's move into another opportunity. I still don't think it's a bad company at all. I just think that what I invested it for has been done, and I'll take that money and go somewhere else now. So Yeah, I did sell my shares in Revolution Beauty, and yeah, it's another stock that's done really well for us, and we'll add it to the list, and we'll move on. And well done to any of you guys that did have shares in Revolution Beauty and bought it through the little dip that it had with the accounts issue last year, and you made a good amount of money. There's not many things that you can make 70% on in a year, so it's good. It's good. So yeah, if you could hit the like button if you're new, subscribe. If you do want to hit that Black Friday deal up, make sure you just send me an email and I'll try to get back to you as soon as possible. And thanks for watching, guys. Have a great weekend. See you in a bit.